Welcome. This is the Fixer interview series, and I'm here with Tina Perkins of Tina Perkins CPA. Welcome, Tina.
Thank you for having me, Justin.
Tina is an excellent CPA, in my opinion, my CPA, and it's tax season. So what are the questions most people are asking? One of the things is a lot of people got a stimulus check in 2020. Is that money taxable at the federal level? Is it taxable at the state level? What can you tell people about the stimulus checks they've got?
Well, the stimulus checks are actually a credit against your 2020 taxes, although you were advanced the money based on your 2019 and possibly your 2018 tax returns. So the money is not supposed to be taxable, provided that you got the proper amount. It is going to show up on your tax return, so you do need to let your tax preparer know how much you received so that it can all work itself out on the tax return itself.
Okay. Now, you also work with a fair number of small businesses, and a lot of them probably got the PPP loans and are hoping it's going to get forgiven. Is that money taxable? If I got money as a PPP loan that gets forgiven, is that taxable income to the business, or what does that look like in simple terms? I know it may be different.
Okay, let's kind of walk through it a little bit. The PPP loan is a loan, so should be recorded on your books, your business's books, as a loan. And you received it in 2020, and you're spending that money in 2020 on 2020 expenditures. So what's going to happen is your expenses are going to take place on your 2020 tax return, and if the loan is forgiven, then it will be removed. It will remove the loan off of your books, and the forgiven part would then show up on your profit loss, which would not be taxable at the federal level.
Okay.
And that would be if you applied for forgiveness and got it forgiven in 2020, the forgiveness and the expenditure would all happen within 1 year. But if you did not apply for the forgiveness and receive the forgiveness in 2020, it rolls over to 2021, then the expenditures are going to show up on your 2020 return, and the forgiveness, non-taxable part of the
Great.
used to be the loan is going to show up on 2021 as not income. Okay, now that is at the federal level.
Okay.
You got to check with your state, and hopefully they follow the federal, and
But each state could be different.
They could be.
Excellent.
But it's all supposed to be there to help out the small business owner. So more than likely they will not show it as taxable income, and you will get the expenditures for it.
Okay.
Okay.
Now, we're in 2021, and they just recently extended the tax deadline from April 15th to May 17th, I believe it is.
Yes.
And I know that means a IRA or Roth contribution also got delayed until then. When the federal government does that, do the states all follow suit and say your North Carolina, your Mississippi, your Alabama taxes are also extended? What does that look like?
It's not automatic. And in the state that I am in, which is Mississippi, they just went along with the federal. And I understand that North Carolina, where you are, has also followed the federal. So you need to check with your local state to find out if they are following the federal on that.
Okay.
And more than likely they will. Most of them do.
Okay, good. You would hope so, that you don't have to file one earlier.
It makes it easier if you do.
Especially because the state will lean on people's federal returns in some cases for your North Carolina or whatever state you're in's return, correct?
Right. You normally file the federal first, or complete the federal tax return first, and then do it your state. So if your state is not following the federal, then you just need to file an extension. Okay. And that way we'll get push the date out.
And pay them some money. Hope you pay them enough money, and then hope the dust settles this year.
That's right. That's right.
All right. Now, you're also, in my opinion, one of the strengths you have is dotting the I's, crossing the T's, making sure everything's as perfect as possible, no matter how it shows up on your desk. When somebody gets a letter from the IRS, and you've gotten a fair of these in the last couple of years where people will contact you and say, hey, I've got this letter and I owe hundreds of thousands of dollars in back taxes. Now that's obviously shocking, and your stomach sinks, and as a business or as an individual that gets that letter, the IRS is the scariest thing that can send you a letter. You, at least what I've seen, is you've been able to work with people, companies, to basically scale that back to hopefully a affordable level, but also put it more accurate. How does the IRS come up with their number to just, if they say, oh, no, you owe $200,000 in back taxes.
Well, the problem, Justin, is when people don't file their taxes, the IRS doesn't really know where you stand. And it's not until you file the tax return that you are putting it down on paper, signing off on it, that this is what your income is, these are what your deductions are, and so this is what the taxes calculate to be. So if the IRS is getting these 1099s and W-2s and whatnot, they see that part of the income, but they generally don't see what you're entitled to for the deductions. So they make an assessment based on that. And of course it's going to be more than probably what it should be. And so that's what happens with the IRS. They make that assessment and then they bill you for it. And then they want to also charge you the penalty and interest, which is all accruing.
Can be as much as the taxes, right?
Oh, it can, yes, exceed it in some cases, yes.
Okay.
So that's what their position is, and until you file that tax return and tell them otherwise, that it's not. And so it's going to take filing a tax return to start the ball rolling.
And you're guilty until proven innocent. And your job with somebody is to say, hey, let's prove your innocence, that you don't owe this number, and let's get it to hopefully the right number or as accurate as you can.
Mm-hmm. They want those tax returns, and they want you in compliance. So once again, how can you negotiate or argue what your real position is if you haven't put it out there, and you put it out there to them by filing that tax return?
I gotcha. Now, then obviously we're not going to hold you to these numbers, but when somebody gets that letter, if they have the documentation, if you're able to go through this process and set up the payment plan, is it something where you see a lot of times that IRS ballpark number that they say, yep, you owe $200,000, turns out it's half of that or a quarter of that they actually end up owing, or is there a range where you...
Well, Justin, what I have experienced recently is if you've got a small business, the IRS can really show a lot of money that they know that you've collected, because recently there's been requirements on other businesses that have this reporting requirement. So the IRS is getting all of this information that they know that you have received. They just don't see all of that, the money that you put out that are legitimate deductions against this income. And I have recently experienced where, it's going to be hard to believe, but it's true, that the IRS told a client that they owed $10 million. Now, that was the tax plus the penalty plus all this interest over a number of years, and the IRS was coming on very strong. Once I got the information and was able to get in there and look at it, you're not going to believe this, but it was like only tens of thousands of dollars that they owed. And so now we got to go through this process of showing the IRS what they actually owe. And
so in that case, it was an extreme where you were actually, it's probably only 1% of what they claimed, the IRS claimed they owed.
Mm-hmm.
But are you implying that a lot of times it is 80-90% reduced once you actually show the facts on the expenses of the business and can document? Because they just see the revenue, they see the 1099s and that kind of thing to the business, and they don't know what's going on inside the business, so they just they round up and just say, oh, there's probably no expenses. Is there default?
It's been my experience that there are plenty of business expenditures on the taxpayer side, the business owner side, and they know it, and they're just they're just totally baffled as to why the IRS would think that they could operate a business of this size and make all this money. But you just got to go through all the mechanics that the IRS requires you to go through just to prove to them that that's the case. I think it's on a case-by-case basis. I've had clients, I can think of situations where I've had people come in knowing that they haven't paid their taxes and filed a tax return in years, but they still choose not to file for whatever reason. And that really baffles me on why someone would want to do that and have this problem and the problem only gets worse. And through various clients and also even extended family members I have seen, you go into this dark world that it creates a bad situation where you can't buy things in your own name. If you get a windfall, they take it. It's just not a good position to be in.
So if you get a letter from the IRS, call Tina. That's the bottom line.
If you get a letter from the IRS, do not sit on it. Time is of the essence. It only gets worse.
Does it matter if somebody's watching this and they're in a different state, or do they need to be in Mississippi to contact you?
It doesn't matter.
Okay.
On the federal level, it's the federal government. The federal government goes into all the states.
If you get a letter from the IRS, call Tina.
There you go.
Is there another good time of year when people say they've got a business, they've got bookkeeping, they got their personal taxes? When are the best times to contact you? Obviously, during tax season, you're pretty busy. When should they be proactively? When's the best time to reach out to you to see if they're a good fit for you?
Getting on board, getting in compliance, switching accountants is always a difficult thing to do. The road is always a little rough. You got to start the process at some point. So I say just go ahead and make that call and get things going, because when the time is right for you, it may not be for me. When the time is right for me, it's not good for you. But when you start collaborating and start working toward it, you will find the time and work it out. You got to start the ball.
All right, Tina. So how do people get in hold of you? What's the best number?
They can call me. My telephone number is 228-392-2991.
All right. Thank you for joining us.
Thank you, Justin.
I'm Justin Struble with BSG Advisors, and you've been watching the Fixer interview series with Tina Perkins, CPA. Thank you.
Thank you.